Good afternoon, everybody, and thank you for joining us for yet another COVID-19 Town Hall series presented by Stambaugh Ness. As you can see on the screen, if you're experiencing any audio issues during this presentation or currently, please use the call-in number provided at the time of registration. And this is just due to the influx of attendees that we have on this platform. And here are all the wonderful faces that you will hear from today. We have Kristi Weierbach, Phil Keeney, Tom Moul, Chad Bumbaugh, and Steve Snyder, and Katie Boshniak with us today. And just some housekeeping items before I give you all some next steps and pass it over to Tom. You can customize what you're seeing on your screen right now by going to the GoToWebinar Screen Viewer tab. You can adjust how you see the presentation or how you see the webcams of our presenters today. And all attendees will stay muted throughout this entire presentation today. So please submit your questions through the GoToWebinar questions pane using the following buckets, as we like to call them, in the front end of your question to help our panelists better manage the influx of questions that we get. The topics that you can enter questions under are not limited to the 5 that you see up there today, which are workforce, technology, regulatory, cash flow, and human resources. We do not monitor the chat. The slide deck is available for download in the handout section of the GoToWebinar panel. If you're having trouble viewing that, click the view button at the top of your GoToWebinar panel, and that option should be checked in order to see that and download. And again, if you're experiencing audio issues, please use the dial-in option that coordinates with your registration rather than the computer audio today. And please note that all of the information presented today is based on what we know on May 5th, 2020 at 2 p.m. in the afternoon, as this entire situation still to this day remains fluid. Just some next steps for you. We are holding these town halls till the end of May, possibly longer than that if we need them. The next town hall is going to be same time, 2 p.m. on Tuesday, May 12th. You can also visit our COVID-19 dedicated section of our website for additional insight and information. And lastly, if you needed to contact to go into further detail about a question or a concern, please visit us on our website at www.stambaughness.com and visit our contact page to get in touch with any of our panelists today. The agenda today, before I turn it over to Tom, Tom is going to go through our introduction. We have some information on PPP taxability, and then you'll get our COVID-19 updates in relation to cash flow and the PPP, regulatory, workforce, and then we will be talking about the anticipatory organization today. We will do our COVID-19 roundtable the next 30, 60, 90 days, and we will also have our Q&A portion, as always, at the end of this webinar. So with that, Tom, you want to take over for me?
Sure, thank you, Kaylee. And again, welcome everybody. Yet another week. I think this is the 8th time we've done these town halls. Don't know that we anticipated that when we got started, but as Kaylee said, it continues to be just a very, very fluid situation as we continue on with our response here to COVID-19. So first of all, a happy Cinco de Mayo to all of you. It's been a long haul here. I think we started in mid-March, but we're now here well into the spring. So hopefully everybody can get a chance to enjoy the day a little bit. As Kaylee said, things just continue to change. And the big news this past week was, I think, the bombshell that the IRS dropped on us last Thursday evening with their announcement and how the taxability of the PPP forgiveness program would be handled. And we're going to spend a bit of time on that today. I think a lot of you have some questions on that, maybe even some misunderstanding of that. Maybe we can put you at rest a little bit on that. We think things will continue to change. I'm hearing now that round 2 of the PPP funding is probably going to run out in the next few days. So there may be some need for some additional funding coming there, as well as these other potential programs that we hear that will come. The Senate's back in session now. I don't believe the House is back yet, but when that happens, I'm sure we'll have some other new items coming. And, you know, we say it every week now, it's going to be a broken record, but we certainly continue to anxiously await for that guidance on the PPP forgiveness, and Chad's going to touch on that a little bit when we get into his section. As Kelly said, once we go through our updates, we will have our typical roundtable again this week, moderated by Kristi Weierbach. And today we're going to focus on some of those challenges that some of you have probably already experienced in taking your workforce remote. But we're going to talk about some of the things to consider if that becomes more of a permanent solution for you, even if that's only a portion of your staff. We've got some things there to share from our own experiences at Stambaugh Ness that we think will be valuable to you. So as Kelly said, always keep those lines of communication open to us. We're here not just on Tuesdays, but all week long. Happy to answer your questions. Reach out to us in all the various ways that Kelly had mentioned, our website, reaching out to your connection at Stambaugh Ness, or whatever other means that you can get in touch with us. Watch us on social media, lots of avenues there. We will continue, in addition to these town halls, which we're going to do through the end of May, to continue bringing other information. I've talked about it a few times in the past, but don't forget on May 22nd, if you're an architecture or engineering firm, we are doing a webinar on that day regarding cash flow boosting activities, some maybe ways to get some money back from taxes. You're going to hear when Kristi talks today, there's been some developments on the new quarterly Form 941 to take into account all these payroll tax credits and changes that have occurred. Kristi's going to talk about that today, and we think there may be a need that we put a webinar together specifically on that topic, so stay tuned for that. So with that, I think the first thing we're going to do today before we get into the information is we're actually going to send out a polling question to you, if you all wouldn't mind answering it. So Kelly, if you would launch that, and it's just very simple. We just want to know if you found valuable what we did the last 2 weeks when we had guest speakers in. We had someone from Hillman Consulting 2 weeks ago, an environmental engineer that talked about some of the facilities issues you might be dealing with. Last week we had an employment attorney talk to you, and we certainly are interested in bringing in other industry experts into future town halls, and we're just interested if you find that valuable or not. So if you could just do a simple yes or no answer there. And Kelly, when it looks like we have a good response on that, if you could put the results up. It looks like, well, that's pretty overwhelming. So thank you. You're thinking along the same lines we are. We will continue to reach out into the various partners and contacts we have and try to bring folks to you that have, some very good insight on how we respond to this thing as we go forward. So with that, I'm going to ask Kristi and Chad to actually come on screen with me here, and we're going to have just a little bit of a mini roundtable for you to get started talking about this issue of taxability of the Paycheck Protection Program. So Kristi and Chad, welcome to the screen. So,
thanks, Tom.
For those of you that didn't see it, on April 30, which was last Thursday evening, the IRS issued Notice 2020-32, and it had to do with how the IRS is responding to the non-taxable portion of tax forgiveness. I think from day one, when we started hearing the chatter of the CARES Act and there was going to be this loan program, it was pretty clear that Congress's intent was to not tax you upon that forgiveness. Well, what the IRS told us is, as they interpreted that, and they looked at Internal Revenue Code Section 265A1, and I don't know about any of my other fellow Stambaugh Ness folks, but I sure couldn't quote Code Section 265A1 before last Thursday night. But what 265A1 basically says is if you generate non-taxable income, the expenses utilized to generate that non-taxable income are not deductible. Well, that threw quite a curveball to us because the entire forgiveness is based on those forgiveness deductions. So I know the Twitter world went crazy immediately with all the tax folks we follow. Congress has had their say in it, and we're going to talk about that a little bit. But we're going to talk a little bit about what it means and if it's really going to stick. And I think this response from the IRS kind of fell in line with a little bit of a theme we were hearing from Secretary Mnuchin and other members of the Treasury last week. It's almost what we call a clawback theme. That's like, oh my goodness, we just realized how much money we gave away and how much further we may have increased the federal deficit. So now we're talking about maybe some things to discourage people out of this a little bit. We heard earlier in the week all the talk about you shouldn't be taking a PPP loan if you don't really need it. And I know Chad has touched on that in good detail in prior weeks, and we still feel pretty strongly that most companies can certainly show a need, and I think Chad's going to talk a little bit more to that today again. Mnuchin was saying that anyone with a loan over $2 million is going to be audited before they get loan forgiveness. Didn't really give us a lot of detail on what that means, but it was kind of that theme that maybe we need to limit this money that gets out there. Well, this certainly seems to be along that line. A third item that I noted that I'll talk about in my own update here in a few minutes was some conflicting information that's come out in the economic stimulus payments where they've gone out to people such as deceased persons. Do they really get to keep them or not? So anyway, I think that's where that's coming from. So to kind of put your mind at ease to begin with, we just wanted to run through an example. So Kaylee, if you would advance the slide, please, of how this might work. So we just gave you a little bit of an income statement here with two columns. One where the expenses related to forgiveness are deductible, which is what we assumed at the beginning, and one where they're not. So we kept the numbers pretty even here to keep it pretty simple to follow. So let's say your company generates $500,000 of revenue for 2020. You're given forgiveness on your PPP loan of $100,000. So that is income, be it non-taxable income. Total income for the year is $600,000. Your deductions, including payroll and all of those other things that are allowable in the forgiveness, are $450,000. So in this case, and my goodness, guys, I think we all needed to do a little bit of a closer look at that. I think I have an error in the calculation here, but I'll explain that. In this case, we have net income of $150,000, not taxable income, because remember in this example, the forgiveness is not taxable either. So let me correct myself there and say $50,000 would actually be our taxable income, $150,000 being our net income in this situation. If I'm taxed on that $50,000 at 20%, I think the numbers are going to come out the same, but tax would be $10,000. So I'd pay $10,000. And if you think about that, forget about if I even had the loan this year and just went about my normal business. I had $500,000 of revenue, $450,000 of deductions. Now, if we go over to the other side, again, our forgiveness is not taxable, but now they're not, of that $450,000 of deductions, they're not going to let us deduct $100,000 of it. So what happened there? The deductions offset the forgiveness. So we kind of get back to the same place. So is the PPP still a good deal with this? Well, sure it is. We just have had our taxable income increased in essence by $100,000. So at a 20% tax bracket, the difference is $20,000. But I think our bottom line is still the same. We got $100,000 of cash. If it is deductible, we keep all $100,000. If it's not deductible, then we have $80,000. So getting $80,000 is still a pretty good deal. I wouldn't opt out of the PPP just because I don't get to deduct those expenses there. It's just not quite as good as $100,000. So I know I probably confused you there, and I apologize for that. Just kind of looking at my calculation there. So I just pause. Chad, anything you want to add to clarify anything on that?
Well, I think just a key point is the deductions are disallowed only to the extent of forgiveness. So if you do not receive 100% forgiveness, you would only be giving up the deductions that are forgiven. So this example assumes full forgiveness, and therefore the full 100,000 is an increase to your taxable income. But if you don't achieve that 100%, you would only be taxed on the portion that you are forgiven.
Yeah, that's a great point, Chad. In our example here, we're really only talking about the forgiveness. Your loan may have been $125,000, $150,000, wherever that is. That difference obviously then becomes a loan. And yes, only the amount that is forgiven will have the deduction taken away. So now, what does this mean? How do we react to it? So Kelly, again, if you could move the next slide up, please, just so we could review. Remember, forgiveness does cover not only the payroll cost, but it also covers things like employer health insurance cost on that payroll, retirement plan cost, state and local payroll taxes, qualifying rents, qualifying mortgage interest, qualifying utility cost. And, a lot of that still needs to be defined from the forgiveness regs, but we know that in general. We do know that you still do have some employer cost on that payroll that's not covered, such as the federal Social Security and Medicare tax, and maybe the workman's compensation expense. And again, we've talked about this in prior weeks about how will the states handle it. Well, this kind of throws a little bit of curveball into that, I believe, in that, we were thinking maybe some of the states would opt out because they have revenue shortages. Well, now, if this stands, they may just follow the federal because it kind of gets them to the same place. So with that information in mind, Chad, what kind of thoughts do you have going forward on how Congress may react to the IRS and Treasury's comments here?
Well, it's been kind of interesting to see some of the back and forth because, Congress was pretty swift once this news broke that, their intent really was for the forgiveness to be tax exempt. So right now the IRS would follow case law and the code. It makes sense conceptually what they're saying with historical code. But again, we know this is not an ordinary time, and Congress has, spoken pretty loudly and clearly to some extent on both sides of the aisle that, this really wasn't our intent with the funding. So, it's not for sure what we're going to see happen and what's gonna be the ultimate outcome here, but I think there is hope that this may change, which would put us back to the position where we were getting that maximum tax-free benefit. But as you said earlier, Tom, even with the taxes, you still make out far and away ahead of where you would have been on traditional financing, and most likely with the other credit programs as well. But there is hope for change yet.
Yeah, I guess what I find interesting is that the congressional response to it has almost been bipartisan. I think two of the Senate leaders, Senator Grassley, who's on the Republican side, and Senator Neal, who's on the Democratic side, have both spoken out pretty loudly that what the IRS and Treasury announced was not Congress's intent. Now, I think the thing we all have to remember, though, Congress certainly has the power to overturn what the IRS did here, but that again may take some congressional action, some congressional legislation, which we've seen what the history is on that. That gets to be a little bit of a battle back and forth. It may end up with a lot of other new things being thrown into the mix that have nothing to do with this. So, Kristi, I think this news is just another variable in that decision that a lot of employers are making about, do I use my PPP funds to bring people back on board if I am still closed down or I'm limited and really don't need all of them at this point, or do I keep them out on unemployment for an extended period? So any thoughts on that, or does that change, I guess, some of the advice that we've given previously?
Not really. If you think about the intent of unemployment is to help when people are out of work. And so when you have people that are on unemployment and a company can do the right thing and bring them back, it helps relieve that burden on the system as a whole, the unemployment, taxes, and so forth. So, it does make sense. Bring employees back onto payroll on the PPP, get it forgiven. It's not an additional expense to you as an organization, but it does become delicate because as we see what the governors are doing state by state, there's phasing of reentry to work. So you have the red zone, yellow zone, and green zone, right? And not all states may follow this, but we've seen it pretty common that they're shifting companies and situations through that path. Well, if you're a hairstylist or a massage parlor or something like that, you're in the green. So you may run out of your PPP funds before you can actually even bring people back to work. So in that case, you might bring them back to just lay them off again. And, it's not fun doing that. So the best advice I have for you is try to give as much information as you can in the moment. Don't make any false promises. And do the best that you can to help contribute to the overall challenges that we have by relieving that pressure on unemployment, taking advantage of those credits and grants that are available to you. And, hopefully we can get back to work sooner rather than later. And, we've talked about it a little bit. If you have people on payroll who aren't physically working, can't telework, what else can they do instead? Is there a project they can work on at home for you that has sat on the shelf for a little while, or is there, some training that they potentially could take? Because it's hard to say I'm paying people to just sit at home and do nothing. So think of some creative ways to be able to maybe get some value in exchange for that. Tom or Chad, do you have anything additional based on that?
Yeah, I guess the conversation I've had with some clients, Kristi, is if you are in that type of industry where you just are not allowed to work, you can't telework, your state government or local government, whoever it has been, has pretty much put you in the shutdown mode. And you can obtain PPP funds. You can bring your people back, and maybe that's what Congress intended for these funds to do, to get you off the unemployment rolls. But remember, that's not really getting you any further ahead. You're not able to use those dollars for, productive work. So in a lot of cases, I think folks are going to leave people on unemployment. In that period, the people are doing quite well in unemployment. Yes, it's going to impact your future forgiveness. It's going to reduce your future forgiveness, but you really weren't getting that far ahead anyway, and you might be able to use those PPP funds as cash flow in the meantime to pay other expenses that, those bills are still coming due, whether they're occupancy costs or those type of things. So I don't know that it's kind of a one-size-fits-all answer on that. And I think what muddies it a little bit further, and I'll ask either of you to kind of chime in on this, is unfortunately a lot of this guidance came out late. People already had their PPP funds, so they may have already made that decision to put people back on work, on pay, even though they're really not being productive. So I think there's some psychological or emotional impact to bring them back, take them off, put them back on again.
Yeah, and that's why communication is critical during these times, and just be as honest as you can. So the one thing that you might want to think through, which many of you probably already have, I'm not saying anything that's new or different, but benefit deductions. So when you're paying employees with your PPP loan, you have the opportunity to capture some of those benefit costs, the employee share of that from their paycheck. While they're on unemployment, that's kind of halted in the moment, and then you have to collect it after they do come back from work. So one of the biggest questions I get is, what's the difference between furlough and a layoff? Furlough is short term, where you keep them on benefits, and you know that at some point in the near term you're going to call them back. It's layoff that becomes a little more permanent. Heard of a situation today where there's a permanent layoff until September of a marketing person. And so that makes sense, where you would shift somebody possibly to COBRA, so that way, it's off of your benefit plan and so forth, at least in the short term. So Yeah, it's not a one-size-fits-all. I wish it were. It would be so easy and so simple. Make our jobs a lot easier, all of you on the call today. But yeah, Chad, do you have anything else?
Yeah, I think I will add, we mentioned last week in passing some of the AICPA's recommendations around, how they'd like to see the forgiveness structure in the 8-week period and when the clock would start, because this taxability and if you're really not getting productive contributions out of the folks that you're bringing back from unemployment, again, I kind of agree that it's something you really got to think hard about, the emotional impact and also the cash flow impact. But right now, the 8-week period starts as soon as the loan is funded, period. And the AICPA discussed or suggested that should be an option in terms of it either starts when you're able to return to and do business again, or at least start it in alignment with a pay period. So if you think about the clock starting today, if I get my money and maybe I don't get to open my business for 2 weeks, I could potentially have 2 weeks of labor that I may have paid that was non-productive. But if you have the option of saying, you know what, I'm going to start my 8-week clock mid-May when I'm opening, this issue becomes a lot less important. So it's just very interesting to see what the forgiveness guidance is going to be. I know we've been harping on that for a couple of weeks now, and I wish I could make that appear sooner. But again, here's another wrinkle of where not knowing that can impact and influence our decisions. And I think where you were going, Tom, is there's only so much liquidity that we know that we're going to get out of this program, and do we want to use it now or potentially save it for later? Because we all don't know when the outcome of this is. So that's just another wrinkle I think I'll comment on in regards to this development.
Yeah, I totally agree, Chad. I mean, if the AICPA's recommendations would be listened to and taken into account, and it's not just the AICPA. I know the National Federation for Independent Business Persons has done similar requests. I know some of the manufacturing, the construction, the architectural and engineering industry groups are doing the same. Everyone's asking for the same thing. And I think our message has to be that while this announcement by the IRS certainly took, I think, everyone, including Congress, by surprise, don't overreact to it. Don't, say, I don't want the PPP money anymore because of this. Number one, we don't know that it's going to stick. And number two, I think as you can see from our example, that while, yes, it's not as good of a deal as it was before, it's still a pretty good deal. And in fact, and Chad, maybe you can elaborate on this, even if you don't use the money during the 8-week period or don't use it to a tremendous extent for forgiveness, at the end of the day, this is really cheap liquidity, 1% liquidity to keep your company afloat in what could be a desperate time. So I don't know if you had anything more you wanted to say on that, Chad.
No, absolutely. And there's no prepayment penalties with the program. So, if you choose to take the funds, retain them after the 8-week period, there is a little bit of question as regards to, if that's going to be returned or allowable or not. There's some articles that seem to take a position that really reading into something that may not be there in the guidance. And that's something we're monitoring. But again, at the very least, you're left with a 1% loan. That if you end up not needing it, you can repay at any point in time if you're feeling confident about where your business is, where your cash flow is. But it provides that working capital insurance. So it still seems like to me a tremendous program. This doesn't change that fact. And I think we'll just have to wait and see what the next couple developments are to really determine how it's going to play out on the back end.
Yeah, I think this is a topic we'll be continuing to talk about in the next couple of Tuesdays for sure as things develop. And before we move on from this, I just wanted to mention one other point in relationship to the Paycheck Protection Program versus another provision that we've talked about in prior weeks, and that's the employee retention credit. I think we've given, pretty much the opinion in past weeks that if you can get the PPP loan, in most cases, maybe not 100%, maybe you need to look at that on a case-by-case basis, but in most cases, the PPP, because of the 100% forgiveness or close to it, and those expenses you're paying in that 8-week period kind of trumps the employee retention credit. Because remember, the employee retention credit has a number of criteria attached to it. Different criteria if you have more than 100 employees or less than 100 employees. You only get the credit up to 50% of the wages, first $10,000 of qualifying wages per employee. So really, someone who's making $40,000 or more a year, you're going to run out on that credit, after 1 quarter's worth of wages. But since this came out last Thursday, I've gotten that question a lot. Should we flip over to the employee retention credit now rather than the PPP? Certainly, we would highly recommend you model that out. We can certainly help you with modeling that out. We can help you with your forgiveness projections. We can help you with the documentation of whether you truly had the need for the PPP loan in the first place. But after doing all that, I think most people are still going to find that the PPP loan is their best bet. But certainly, we would recommend you take a look at that. So. I think unless Kristi or Chad, you have any further comments on the taxability piece. If not, then I think we're going to turn it over to Chad just to talk a little bit more about the loan program in general and what additional things we may have learned since last week. So, okay, Chad?
All right, thanks, Tom. I do have just one other comment, I guess, to follow up on that. That topic is, to the extent that the news about taxability might change your opinion on if you're going to have taxable income or not in 2020, again, good tax planning may be needed to make sure you have enough funds set aside for your tax balance that may be due next year. I know a lot of businesses we've been discussing and just saying, you know what, that's half our estimates for next year. That's just do no estimates. We're having a real rough time right now. And just that's one other item I just wanted to mention is don't forget about that aspect of it. First and second quarter estimates become due July 15th, and then we have the next round is September 15th. So we have time for those, but just don't want to let those to be completely forgotten and what we're focusing on right now with the COVID situation and forgiveness. So, but moving over to the cash flow update. If you go ahead and advance to the next slide, I just have a couple of items here. Again, just to reiterate that there were no final rules on forgiveness or really further guidance of any material impact. There's a couple of things I'll hit upon in just a minute about some FAQ updates, and I'll circle back to the topic of need, which still continues to be getting a fair amount of press, and we're getting a fair amount of questions on as well. But just a couple of updates on where we stand right now with round 2 of the PPP. The Treasury and SBA released some information over the weekend, and just over half of the round 2 funding, about $176 billion of the $320 have been allocated to date through this weekend. So we're over a little more than half. I know there's applications in the pipeline, and I know, as Tom mentioned, the forecasts are that the funds are probably going to run out in the next 4, 5, 6 days, depending on how many of those applications are duplicate, how many of them will maybe funded or not going to be funded. So we'll see how long that lasts. But a couple interesting statistics from the report that was issued that I think is encouraging for folks that are working with smaller businesses, and hopefully some of you in the audience are seeing this as a result in terms of you're getting the funding. Is the loan size is down from an average of 206,000 to 79,000. So that's telling me that a lot of the smaller businesses that have need are able to get into round 2 of the funding. Another indicator of this is that the loans over $1 million are down as a percentage, from 44% in round 1, down about a third to 29% in round 2. So again, we're seeing a little bit more varied, number of customers or number of businesses getting on the loan funds and being able to take advantage of the capital to shore up their liquidity here in the near term. So in terms of the updates, there were a couple FAQ updates issued by the Treasury, and the one I really want to focus on for a little bit here is question 40, and this is one that I think a number of folks have asked throughout our town hall sessions. What if I have an employee where we let them go out on unemployment, we had no work for them, and now we're ready to bring them back. We're able to operate at some level. We need our staff and our individuals to come back and help us out. But folks are concerned either for their health or whatever matter. They're not willing and able to come back at this point in time. What happens, and how does that impact my forgiveness? And question 40 was issued, and it notes that as long as there is documentation of the request to return to work, written documentation, and then you also have written documentation of the decline of that offer, essentially they're going to provide a de minimis exemption and carve out from the FDE calculation impact of that person not returning to work. So that takes a little bit less pressure off of, what could be a pretty confrontational situation with employees. And hopefully you have somebody else with comparable skill sets that you could bring on, that you don't have to force the issue and potentially, create an HR type matter where somebody's just not able or willing to come back to work. So I thought that was a nice FAQ issue. Gives a little bit of an idea where they're thinking with forgiveness. So that was, in my mind, a positive. A couple other FAQs that came out, a little less impactful. I didn't detail those much of any extent on the slides. 38 was just talking about what is the definition of in business. Businesses had to be operating at February 15th to be eligible for funding, and it talked about what happens if my business is acquired. After that point in time, does that limit my ability? And no, as long as your business was operating, the ownership is noted to really not matter unless it kicks you in those situations where you're no longer eligible because of the overall entity size, the 500 employee cap. 39 talked about the SBA loan files, and we talked about that prior week, where the SBA made it clear they're going to look at loans over $2 million, and also that they're going to review loans presumably at random or in some manner for loans under that. Again, both for public companies, private companies, they've made it clear that these are going to be open to investigation. Also taught that those receiving funds are going to be published in some manner for folks to review who the recipients were as well. So those are some of the general updates. Ken, if you don't mind, we'll slide over to the next item here. And this might look familiar for those that attended last week, but this is just a reminder about the need topic and that interim final rule on eligibility and returning funds by May 7th came out about a week and a half ago. Again, we've had the continued media scrutiny on the topic of need. The original question was question 31 about, does public companies with substantial market value, can they make the certification about need in good faith? And then I believe it was question 37 that the treasurer then said also the same affirmation and same consideration about access to liquidity applies to private entities as well. So again, I just wanted to reiterate that this is an important concept. As Tom alluded to, we can assist with walking it through and talking through what that might look and sound like in terms of the documentation for your files. And again, we'll talk about some of the details and examples of things you might want to include in that documentation. But I think it's critical now while you're living in the moment, making these decisions and feeling the impact of COVID, that you take some time and do develop those items for the back end of this process when we're looking at the forgiveness and needing to validate and prove potentially upon audit or file review that need existed. So there's no better time than now to make your case for why the funds are necessary. And I guess in my opinion, I think hopefully what I'm ultimately looking for or expecting is, the companies really can't make a windfall off these funds, but more or less this was intended to, allow businesses to continue to employ their employees, to prop up and shore up their liquidity so that they're able to return to business when things came back to normal and the economy opened back up again. So, we're thinking that the vast majority of small businesses, had that need to meet those criteria. Okay, if you want to go ahead and slide to the next page of the presentation. Again, as you're thinking about, these funds and the need, and again, the 7th is the date that, there's really no harm, no foul if you took money and realized we didn't need it. Here are the kinds of things that we're thinking about are relevant to include in your documentation and to consider. Shutdowns, the cash flow, liquidity impacts, the volume, operating losses, if you have bank covenants, Again, the workforce matters. Did you retain your employees because of the PPP funds? Decisions not to furlough or reduce your workforce, and just the productivity impacts. Some of the changes that we're making, we're not able to recoup those investments, but they're necessary to keep in operations. And then, just any damages that may have been incurred as a result of the slowdown or the shutdown. And then what it costs to get your facility back up and running. Not all of these are eligible costs for forgiveness. But these are things that certainly take, capital and time and the money away from them operating the main business. And the broad consideration of, sources of available liquidity, I think, is another important consideration. And you can also discuss, what is your borrowing capacity today? And, maybe we do have a line of credit, which we need for seasonal, demands to buy products and raw materials because of the seasonality. Think about retailers around the holiday time. They're buying products, having to have the shelves stocked. And they need to be ready for those kind of things, and that requires upfront capital. So all of those types of considerations are the things that we're suggesting businesses take a hard look at. Get that written down now, and prepare yourself for review. As if you're going to be looked at, and ask, why was there need? So the one other topic that I've gotten a couple questions on that I want to hit upon in this section is related to just the wrap up of this process, and what does it look like on the back end. And again, this is we're going to have a forgiveness period after the 8-week cover period. Banks have around 60 days to look at that documentation. And what happens if the bank finds that I made an error on my original loan application? So maybe I forgot to take out the the employee contributions to the health insurance. So my original loan amount was a little overstated. In our opinion, this is not definitive, but we think those unintentional errors, oversights, we don't see that that's going to be something that's going to be hit with penalties and fines and punishment. But if somebody falsified payroll records or created, W-2s or information to create a loan, really when there was no true payroll cost, those are the kind of things I think that they're trying to cramp down on, not unintentional errors, that can be easily remedied with some true ups on the back end. But again, the final rules are not written around that. But that's just kind of our take and our read on how we think that's going to play out when it comes to that forgiveness assessment. In terms of documentation around these items, I think we talked earlier about keeping your invoices, keeping other information to support the expenses that you're incurring and paying. Something that we've seen a couple banks now mention is, they want to see either bank statements or even canceled checks to support and evidence these expenses. So again, I think erring on the side of gathering all that information and keep it readily at hand for the forgiveness period is also another suggestion that I would make. Just if you want to move to the last slide, and then I'll wrap up in closing, and just I wanted to remind everybody of some of the things that we need to think about. And again, the 75-25% payroll rule. We must use 75% of the forgiveness towards payroll costs. And again, how does the discussion that we had earlier about the taxability play into this? If we decide to adjust our payroll spend, we may need to monitor that a little closer. Again, the FTE measurement, we talked about the new Q&A or FAQ question about the FTE measurement that was favorable, I think, for businesses. And then the salary threshold, we must pay at least 75% of prior salaries. So just again to remind everybody about those thresholds as you're thinking about forgiveness and moving further into the 8-week period. And then the strategies around those items are below. And the one caveat again is, if we're not going to have productivity in regards to the wages that we're paying, you may want to give pause to bringing back those employees who were on reduced schedules or were furloughed. If they're not making productive contributions to the business. We just think that the tax impact may have reduced that benefit, because you also then have to cover the FICA, and as Tom mentioned earlier on the slide, the workers' comp insurance, potentially. So there's some things there that we just think, this news is giving a little bit of pause on, and just as you think about your strategies and what that looks like going forward. And we've had a lot of discussions, working through modeling and working with clients on all these items. So if there's need, certainly reach out, and we're glad to dialogue and look at your situations. We know each of them are very unique right now. So that's all I have. I'm going to give it back over to Tom for some regulatory updates at this point.
Thank you, Chad. I don't have a whole lot to go over with you this week as far as tax things. There's certainly lots and lots of new tax provisions that have come out from the CARES Act and such, but I think we've hit them pretty hard in prior weeks, and we're more than happy to talk to you about them if you have any questions on them. The only two things I wanted to mention this week is just some things that came out over the course of the past week that you may have heard, and I just wanted to comment on. One was, again, about the economic stimulus payments, the direct tax payments to taxpayers. There was a lot of chatter in the news prior to last week about when these checks started going out. They were going out to lots and lots of different people. Some people were getting them, some weren't. But there was several millions of dollars that were found to go out to deceased people who had passed away in 2018, 2019, and 2020. And most of the commentary early on was that really the IRS had no reasonable means of getting these dollars back, so it looked like they were going to be able to be held by the beneficiaries. Well, that was another one of those things Secretary Mnuchin kind of surprised us with some comments last week and said, no, we do want to get those dollars back, and we will be issuing some guidance on how to do so. Well, like the loan forgiveness guidance, that hasn't come out yet either. In fact, there's been some other people that spoke out and said that there's just no way that can happen. One of those was Nina Olson. I know that name probably doesn't mean a lot to most of you, but she is the retired IRS taxpayer advocacy person, the person at the IRS that really works on your behalf as a taxpayer if you have disputes with the IRS. And she had some very strong comments saying what Mnuchin was suggesting is just not feasible. So I don't have great advice for you if you're in that situation. I personally am. My mother passed away, and I've received a check on her behalf. My best advice is to just hold tight with that. I'm just holding on to that check until I learn a little bit more to learn if we're really truly able to keep that or not. So, I apologize if you're in that situation and have to face that, but I think the best we can do is just hold tight on that for the time being. And another thing that came out is we've gotten so many forms of guidance as we've gone through, from the actual acts themselves, the Families First Coronavirus Relief Act, the CARES Act. So, there's certainly very long and formal legal bills that have been passed that we can read through. Then we've come out with things like final interim rules and other guidance. Then we've had Department of Labor, the IRS, the Treasury Department come out with FAQs. And in many cases, there's been some inconsistencies with that. This taxability on the PPP money is as good of an example as any on that. We have to realize that authoritative guidance from the IRS in most cases has not come out yet. We can make a case to rely on the FAQs and other statements that have come out thus far, because that's the best we have at the moment. But just remember, they can be trumped. So we try to make that point every week when we do these town halls. It's a very fluid situation, and we're giving you the best information that we have at the moment. And I think you've seen that in the past. I know week after week, Kristi was telling us that Department of Labor FAQ had another X number of new questions added to it this week. With things moving so quickly, those interpretations will continue to come. So I think the best advice we can give is to just stay tuned, stay on top of all the information sources, and we'll continue to respond appropriately as we get better and better information. So I just wanted to put you on alert to that sometimes it may seem like we even contradict things we said the week before, and then sometimes that may even be the case. But we're just trying to keep you as up to date as we possibly can with that. So that's all I had on the regulatory end this week. So with that, I'm going to move it on over to Kristi for the workforce update. So, Kristi?
All right. Hello again, everyone. Yes, as Tom had alluded in his opening comments, I'm going to talk a little bit about the 941 form. We've been waiting, and we finally got some updates on that. And after I'm done, I'm going to hand it over to Rick. He has a little bit of a surprise for you, so stay tuned for that. So I don't know if you had an opportunity to see the draft 941 form yet, but you can go out and just search for it on Google, and it'll come up probably pretty close to the top. So the form is a little overwhelming. It was expanded from 2 to 3 pages. And if you're with a payroll provider, you've probably already done the heavy lifting with this. You've already started communicating with them as to the time that your people are taking off and entering that as you're processing payroll and so forth. So for those who use Paylocity, Paychex, ADP, you probably are in a pretty good shape. Now, if you do it internally, if you do your own payroll on QuickBooks or some other platform, I would encourage you to spend a little bit of time reviewing the form and also the instructions that come with it. So the instructions are 18 pages. Tom tells me that there's more in there than what you would find with a corporate tax return. So I'm going to trust him on that. But it is overwhelming. I've got to say that I'm still trying to wrap my arms around it. It is interesting because in the form itself, the IRS gives you estimated time frames, right? And so they have nearly 14 hours of record keeping time that they expect somebody to have to invest to get ready to prepare this form, and then an additional hour plus to actually prepare the form. So that was a little alarming to me, and I could see where time would add up pretty quickly. One of the things that they did do is on page 13 within the instructions, so write that down, they did provide a worksheet. They call it Worksheet 1, and it walks you through doing the calculations for the paid sick leave, the expanded FMLA, the employee retention credits, and so forth. So I can't say that I'm an expert at it yet, but we will look to schedule something in the near future to try to give more clarity and take a deep dive on this, because the town hall just isn't enough time for us to cover it. But you can expect that from us. We'll more than likely wait until they finalize and approve this form. So what typically happens with the IRS is that they will create this draft, and they, for the most part, believe it's in its final form, but it does have to go through a review and approval process. So during that process, there might be some tweaks and edits that happen along the way. So we're not supposed to use the draft for filing, that we will get a final version of this. And I expect hopefully by June, we'll see that. Not quite sure what that turnaround time frame will look like for the approval process. So stay tuned. If you do your payroll in-house, you definitely want to take a look at this now and start just taking a look at how you're tracking your information. And if you just say, you know what, this is way too much, it's too overwhelming with all my other job responsibilities I have, Stambaugh Ness is happy to jump in and help you with that. Next week, we'll be better positioned, I believe, to have our arms wrapped around it, because this is really hot off of the press as of the end of last week. So I encourage you to just let us know if you need help. We're happy to weigh in and help you prepare that. And for anybody who's currently in our service already, we'll be reaching out probably to get some additional information in the coming weeks. So with that, I'm going to invite Rick to join me here, because he's going to share some exciting news with you. We were putting our heads together to get a little creative as we move forward. So Rick, there you go. I see you. Is your mute off?
Yes, it is. Yes, it is.
Great. All right, take it away.
Well, glad to join everybody again in our, as Tom said, our 8th town hall meeting. And again, this phase of our presentation has really been focusing on designing your roadmap to reentry. We've really been encouraged people to, even though you're dealing with a lot of issues, to start to try to identify those disruptors that you're going to face and apply some of the concepts that we mentioned by Daniel Burris, the futurist author and speaker of the Anticipatory organization. we've really encouraged you to look at your 30, your 60, your 90-day plans as we work through this. And some weeks ago, we had Chris Baker from Hillman talking about facilities, making sure that you're addressing the issues, because one of the biggest things are the fears for people returning to the office place. So those things that, what must be done, what can we do to have the facilities ready for the return. Workforce, last week we had Mike Krasinski from Barley Snyder talking about understanding the human aspect and the needs. And I can't tell you the number of firms that I've talked to over the weeks and listened to panel discussions, how many people have taken a proactive stand to survey their employees, giving them very important intelligence to know and to assess their team members, when are they going to be comfortable to return and when are they going to be available to return. We talked about technology, and again, the panel will be discussing that, the needs. It was in a recent survey, there's been significant IT technology spend in the first quarter of 2020 and continuing. And how's that going to be impacting, the employers and the businesses? Operations as well. What's the new style, and how is this going to be affecting us as we look into the future? In a recent presentation that the author Dan Burris mentioned, he said we really have gone through, or we're going to be going through 3 phases. We went through a triage phase. It was just, everybody was, being called to action at that point in time. And now we'll probably find ourselves in what I would call the transition phase, where we're starting to work through that, talking about returning. But I think more importantly, and this is where we want to focus on this whole idea of being anticipatory, we got to start to talk about the transformational phase. More and more, this is the time to look into those things. And I know it's hard. It's very difficult to, step away from being reactive and putting out all the fires and pause and say, what are the things on the horizon? What are those black swans that we have to start to think about, look at, and try to pre-solve before they happen? Now more than ever, we really need to focus on becoming anticipatory and an anticipatory organization. I'm going to ask Kaylee if she'll just advance the next slide for us. And I thought it was only fair that over the past couple of weeks I kept mentioning this book. So on the screen here you'll see an illustration of the book cover and then the book that I referenced a number of times. And our hope is here, after listening to some of the comments or panel, we're going to ask you, the participants today, to reflect on what things you may have gone back and implemented from a proactive, preactive plan as you try to deal with some of the issues. And to try to motivate that, we're going to just ask you to share in the chat box by putting AO and then a comment, something that you have done to incorporate this thought, or at least to begin to think about of more of an anticipatory mindset and how that has been implemented. Once we get those back, the panel will reconvene, and then at next week's town hall meeting, we'll be sharing with you what we identified as one of the top efforts that one of the participants or attendees has implemented. And by doing so, we'll be prepared to share with that organization complimentary copies of the book, along with a preface in there, a little bit about the Stambaugh Ness and the initiative that we've undertaken in our experiences. So throughout the conversation, we're going to be shifting over to the panel discussion on the reentry roadmap and the areas of technology, workforce, operations, and feel free during that time to just go into the chat, put AO, and then describe your experiences or the things that you've implemented that you'd be willing to share. So with that, Kristi, I'm going to turn it back to the panel to get started on the panel discussion phase of today's town hall meeting.
All right, thank you, Rick. Well, I don't know about you, but I would be very excited to receive that book. Hint, we've already read it, so it's good stuff. You definitely want to submit your ideas, and we'll have fun picking the winner. So as everybody is joining me here on the screen, I just wanted to share a few thoughts with you. related to what we might be facing as we bring employees back to work and continue to move throughout the rest of the year. This situation has definitely caused a lot of confusion, anxiety, frustration, and it's really, a lot of emotions for employees to feel, for you as an individual, a parent, a child, a boss. It's a lot of stuff for us to handle, and in some ways, stuff we've never had to deal with before. So, there's a few things that we can do here and now to be able to help relieve that feeling, make it feel better, like we're at least putting one foot forward in front of the other. So if we communicate as much as we can, I know Katie touched on that last week about how incredibly important it is. If we can provide clarity on the roles and expectations that we have for our employees, what are they going to have to do going forward? Is it the same or is it different? It could vary from one position to the other, from one company to the other. So, thinking about how you can best provide somebody the clarity they need to be successful in their role when they come back. You also want to lead with direction. So what are we looking to achieve? What's our purpose? What's the strategy that we're going to now pursue in light of all this? Is it the same as what we said a year ago? Is it different? And why is it different? Let's talk about that and how it relates to each person and their role. And, focusing on results. Let's try to set some milestones so that way we can feel measures of success, like we're making progress and moving forward instead of being stuck idly in one place here. So if you haven't given a lot of thought to your systems that you have in place, your processes, the structure of your organization, how that all is aligned and integrated, take a few moments, carve out an hour or two this week and, just sit back and think through that. What does it look like now? What does it look like in the future? And what do you have to do to move forward? So Katie, I'm going to hand it off to you to say a few words about, this whole bringing people back to work where we have a hybrid of some that might stay remote, some that might do a bit of a hybrid, at least in the short term, and then others who are just saying, bring me back to the office, right? So what advice do you have for us today?
Okay, I got my mute off, so I'm in good shape. Well, it's interesting when I was thinking about that, there's definitely, I think for all of us, we have this gigantic blurred line in our life between life and work. And as Kristi said, there are going to be some people that are going to be re-entering the workforce 100%. Some of it may be a staggered schedule. A lot of that has to do with, maybe daycare. That is such a big, I would say a big thing that people are working on right now is trying to figure out what is that going to look like. And I think that with all, obviously a lot of the different things that they have out there to support that, it's still that a feeling of, oh my gosh, I have to think about going back to work. Are we doing, school's going to be coming to an end soon. What does that look like? And I think in addition to that, Kristi, also too, taking into consideration, I don't know if many people know, but May is considered the mental health month. And it is something where, as we have spent so much time sheltering in, that people are impacted by this in many, many different ways. And, some of that too, so, there might be re-entering into the work, but they're still kind of trying to reconcile, some of these mental, if you talk about mental health, loneliness and isolation, like you had said before, people are super excited to come back, but then, is it safe? So I think, like you had said before, the communication is critical. So that plan needs to be in place. So that would just be the things that I would think about as they start to return, is just really kind of working with those individuals and understanding, some of them might not be able to just flip a switch and automatically come back. There might be some that really have to take into consideration, themselves, their children, and their home.
But Darren or Phil or Rick, I know you're still there, Rick, although you're not showing us your video. Does anybody have any reaction to what Katie and I shared, being maybe from a different perspective, a different role, if you will? Do you have any thoughts you want to add, Darren?
Well, I think there's certainly a reality that this remote environment is going to probably continue a lot longer than anybody anticipated when we started out on this little journey. So certainly, starting to think about what we need to do to adapt to it for a longer period of time and potentially, semi-permanently is something it's a mindset I think we need to start to embrace to some extent.
And Phil, as you think about the impact from a technology standpoint, I know there were probably temporary arrangements made so people could not have too big of a gap as they shift to working remotely, but coming back and maybe being at it longer term. What are your thoughts? What are you thinking as we talk about this impact from a remote standpoint?
I guess I would preface to say, how long do you have? Just like Katie,
couple minutes.
The comments she had made there, and then Kristi, you had led into, ironically, not even knowing what I was going to present today as it relates to the remote workforce and just the daily grind now of having kids at home. I mean, most of you on the call, and Katie, Darren, and Kristi there, you watching behind me here. I mean, of course, living in Florida, having kids at home, I have 3 of my own. On any daily, day, I might have 6 to 7 kids in the house. And if you saw behind me, kids running in and out, bathing suits, in and out of the pool. So we're all in this together and trying to figure out, like Darren had mentioned too, what does this look like going forward? I think we're going to be in a remote capacity for much longer than what we do. Maybe for some people, maybe longer than what we desire. So it's a matter of embracing it, and what does that look like? And some people, I think a question that I get more often than not is, okay, I get these people, they're in a remote workforce, okay, we have them out there now, but man, how do I manage productivity? How do I make sure they're working, doing what they're supposed to do? And my comment to them is and going back to the Anticipatory Organization book, maybe skip that piece of it and take a look at it maybe in a little bit different capacity. Instead of asking, how do we manage productivity, first look at how the employee's role will change, how the job duties are going to change, and how communication methods are going to change. So Kristi, like you had led off, communication, role changes, those are all things that businesses are going to have to address now and in the near future. Having clear expectations on communications and roles, managing productivity will then become clearer, a lot easier to manage. And, if you heard me on the past few town hall meetings, I spoke about supply chain disruption. What does that look like for just ordering simple things as webcams? I mean, my goodness, I have people that are reaching out to me and say, hey, I have another employee. They're now going to be working from home full time. Do you have any webcams available? I searched my distribution channels. They say, hey, even ordering from Amazon, unless you want to spend $400 or $300 on a webcam to get it in 5 days, when typically you might spend $50 to $100 to get it next day, prepare yourself, plan ahead, look down the road. So again, the past few weeks, I spoke in regards to supply chain, cybersecurity, and securing the data there that's being transmitted now, people working from home, how they're accessing it, the types of communication platforms that they're using, and how to address bandwidth concerns, and ultimately businesses' greater desire now more than ever to move towards a cloud-based solution. And Rick had alluded to it there a little bit earlier in regards to some of the statistics out there, whether they come from Forrester, Gartner reports, PSMJ, MIT, all these reports are pointing to and reflecting remote workers will increase, will be a thing more now than ever going forward than what it has been in the past. And when you take a look at that, some people are trying to wrap their heads around, okay, I get that. You know, when this whole COVID ordeal came about, people were just scrambling in the moment to push people remote, thinking it's a temporary thing, but it's not. It's going to be ongoing, and organizations need to be looking at, and Rico, you'll love me for this here, going back to the birth piece, but the soft trends, hard assumptions piece of this. The remote workforce, it's not going away. It's a soft trend. It's a hard assumption. It's out there. There's data that supports it. So you better be embracing it in some capacity and getting on the bandwagon, the train here. And, you know, I get these emails daily. Everybody on the town hall here, I know they get bombarded with them. There's daily blasts. There's emails that come at you for registering for webinars, guiding you how to implement practical strategies for your workforce, how to increase security measures, how to set up your home office to be effective, and yada, yada, the whole way through that. I'm not saying that information is not valuable, but amidst all that noise, you know, you're sitting back thinking, I don't know anything about technology. I understand my business and some of the processes here, but how do I go about understanding the technology piece of that? And one of the many challenges businesses face today is just how do we manage a remote workforce? And business leaders are saying that this remote thing won't work because employees become disengaged, productivity suffers. I get all that. But I said, take a step back and look at why those employees are disengaged. And I would be willing to bet, and this isn't just my assumption, well, I guess it could be, it's my opinion, but it's my opinion based upon conversations that I've had with clients, based upon data that's out there that's proven, okay? Take a look, the lack of engagement, the lack of productivity. Look at the leadership. Look at the direct reports and the leadership from the top down. Are they engaging with their employees on a daily basis? And guys, you may ask, well, why are you still talking about this? Shouldn't that be HR or some other function of the company? It could be, absolutely, it should be. But at Stambaugh Ness, IT, HR, operations, we're all in this together. It's not just, well, IT does IT. Absolutely not. It's all part of process that ties together. We're all in this together. So, you know, I've been a remote employee for, I think, the better part of 5 years now. And I would say I can sit here, but I'm actually standing now. But I can stand here in front of you today and say that, hey, you know what? The most important ingredient to that secret sauce in having that engaged workforce is effective communication. And Katie said it earlier. And I don't mean just something that happens monthly. It needs to happen daily. And when you're engaging with your team, build that relationship, that personalized touch. Connect with the team members daily via instant message or video chat. I'm not the one that, you know, interacting with my team on a daily basis. To send them an email, I feel that's something that I send someone maybe that I'm not as close to. With my team members, I like to shoot them a text, give them a call, an instant message, something within the Teams chat that we use, the communications platform, something that's a little bit more personal. And I've actually had an email from a client. This is a conversation I was engaging in terms of the remote workforce, what communication tools are effective, how Stambaugh Ness doing it. And, you know, I had an email come through from a customer on reasons why the remote workforce won't work. I mean, you're going to have those naysayers out there. They don't have a home office. Their house is too small. They don't have, you know, an actual dedicated office space. Or they can't get away from a distraction. Kids are at home all day now. I mean, you saw my dog walk past the door. My kids walk past the door. But I'm still focused. It's a mindset that you have to get into. And some people may say, you know, that while this individual said that the employees may not have sufficient internet. When you think about the engineering side of this, the architectural side of businesses, the design collaboration is crucial for large projects. You know, we need to engage in person, and the list goes on and on. So I just turned the question around and I asked, I said, you know, do you feel this remote workforce concept is going to decrease or increase? Well, I think it's going to increase. You know, COVID-19 proved that, and I don't think people are going backwards. And this is a comment that this individual said. So I said, okay, if this is a soft trend, a hard assumption, and we know that remote workers, this remote workforce mindset is going to continue to increase going forward, why aren't we embracing it? Why aren't we looking at this and saying, okay, labeling all these lists of why it won't work? Think about ways it will work. Make a list of how we can, not how we cannot. And just like I mentioned earlier with Stambaugh Ness, go ahead.
I was going to say, you're hinting a lot on changing the way that you lead. So you've given very good examples of how you're communicating more frequently and being in touch, you as a leader being engaged, and then also helping your employees to be more engaged by having that connection with them. So I'm interested to hear from Rick too. What else have you seen from the data and the statistics that are aligning with this shift maybe of how we lead, or some of the other things that we need to be aware of, with regard to what we're doing as well as how, we're helping our employees?
Kristi, I think one of the things I mentioned earlier was this whole idea of surveying, and I certainly hope people have taken that recommendation and been proactive, because in talking to some people, there's been some surprises, things that people didn't expect, they weren't hearing. If many of the people attending can't tell, I'm a baby boomer. And when we talk about the anticipatory organization, we talk about demographics, and that's a hard trend. Demographics, there is a huge group of my generation that is retiring, and companies were stressing over that already, knowing that this huge group was going to be retiring soon. Well, guess what I'm hearing? There's people saying, hey, I'm accelerating my retirement. I'm going to be moving on. So I think the sooner you get that, this whole idea of remote, as a baby boomer, and I think some of the people at Stambaugh Ness refer to me as the dinosaur. I'm a little slow at the technology stuff, but I think that to the extent that hasn't been embraced by some of my fellow baby boomers, and it's not as comfortable, I think you're going to have people rethinking that. So this whole idea of reaching out and checking out where people are, I think is going to be critically important, because demographics is a hard trend. You're not going to change it. We're going to be aging. There's going to be an exodus of talent. And the sooner you know that, the better. Now, is that in a 30, 60-day event? Probably not. But when you're being anticipatory, and you're looking out of that windshield, not the rearview mirror, you're looking at what's the future so you can start to plan for it. So I can't emphasize that enough. I'm hoping people are taking that time to look out, ahead, particularly as it relates to personnel and talent.
Yeah, so Katie, I'm going to put you on the spot here a little bit. Normally, HR professionals get a little worried when you hear the word happy hour, right? Employees congregating, drinking alcohol, maybe doing some inappropriate things. And so you really embrace the idea of some of us internally at Stambaugh Ness having a virtual happy hour. And it's beautiful, because I think, it's a great way to speak to what Phil was talking about being engaged with your team members and, trying to be different. And so, Katie, do you want to speak to that a little bit about the happy hour and how companies could successfully do that?
Absolutely. Thanks for bringing that up, Kristi. I think it's really neat to see how that's happening. So at our firm, for those that are on the line, we don't mandate it. We don't tell people you need to do this. It's just really interesting to say, hey, we're seeing some things out there as we read articles and we look at the YouTube videos that are out there and what companies are doing. I mean, like Jimmy Fallon, for example, I love watching his shows because it's a very different approach. And some people are doing their happy hours. And so I think in those situations, obviously you might want to have some ground rules, just so that everybody understands what's okay and what's not okay. I've seen some real horror stories of some meetings going wrong in YouTube, and I'm sure you've all seen some of those and you know what I'm talking about. But, I think it's great to not necessarily have an agenda. I think it's just come as you are. Some people will want to have a beverage, some people will not, totally okay. And really, it's interesting because a lot of the statistics that I've been seeing is right in that afternoon hour where people start to get into that loneliness mode or feeling isolated. To know that they have something like that to look forward to is great, and it's a change of scenery. It's not something that they're doing day in and day out. So, and I've asked a couple of people internally that have kind of hosted those happy hours, and what was that like? What did they do? And they said some people stayed and talked, and the other people had responsibilities and left. But it was just really kind of nice getting to know some coworkers, maybe people that you don't normally get to see. So I think it's a great idea, and it gives people an opportunity to just kind of let their hair down, or maybe even talk about how they're cutting their hair now. Because I know even my husband, he keeps asking me, will you cut my hair? And I'm like, I don't know if you really want me to do that.
Yeah, we are taking on additional responsibilities, aren't we? So does anybody else on the panel have any thoughts or added comments to the happy hour or things we've talked about so far? No? All right, Darren.
Not other than some of us.
Oh, go ahead.
Some of us have more hair now than we used to. Speaking of letting our hair down.
So Darren, cash flow is a really big concern for companies as they're trying to figure out PPP, laying people off, paying suppliers, having customer agings not climb out of control. So are there any specific tools that you recommend for handling some of this? And it might tie into Phil with some of the technology that his customers have been looking to explore further or add to their tool belt, if you will.
Sure. I mean, like you said, I've alluded to or spoken about the need for cash flow visibility. And last week I touched on a little bit about just general risk management concepts. And so I thought today I'd just make a few comments about what kind of tools are out there that might enable some of these strategies. And the first one, the most obvious one that comes to mind is your ERP system, and whether that's, for some people or a lot of people, that could be QuickBooks. But then obviously on the other end of the spectrum, there's a lot of industry specific, much more robust systems that are in place. But basically these are all integrated systems that are, I think, most capable of streamlining your processes. And as we have talked here today at length, and I think it's been a pretty common topic in general in these panel discussions, that we talk a lot about enabling remote access and communication, which is what we just got done discussing among the remote workforce. But with this remote environment likely to be extending longer than what we anticipated, I think we also need to start thinking about pushing these concepts down into our business processes. And, it could give a whole new meaning to business process assessments, because we really, I think, need to start thinking about re-engineering our business processes, and starting to identify anything that's manual that can be automated. I think we see a lot of manual processes in payables processing and disbursements, billing and collection processes, a lot of times in payroll processing. So any of those areas, even like, if you have a lot of spreadsheets in place, any of those areas where you have manual processes, it's really, I think it's time to start, when you think about the 30, 60 day, 90-day concepts that we've been discussing, these are things in those 60 and 90-day categories, I think, that companies should start contemplating, like, how do we need to start to adjust our processes to make them more automated and accommodate this remote environment better? In addition, Phil touched on a little bit when he was talking about needing to monitor our operations and our financial results. So the other thing I think that ERP systems bring to the table is generally pretty good reporting, monitoring, and dashboard capabilities. So definitely, setting your systems up to take advantage of that information so that you have visibility into the performance of the organization, both operationally and financially. And for the most part, I think ERP systems, like I said, generally have good dashboard reporting capabilities, but maybe not in all cases. So, there are also tools available that can supplement your ERP system. So sometimes utilizing like an external business intelligence system can improve both the flexibility and the timeliness of reporting. I know at Stambaugh Ness we use a system called Microsoft Power BI, and I think we have found that to be a pretty significant step forward in terms of the timeliness of information that we're looking at and the ability that it gives us to monitor information and make decisions on a regular basis. I would say, generally speaking, no matter what you're using, whether it's a reporting system within your ERP or an external reporting system, you need to keep in mind the fact that you've got to have good data to start with. If you don't have good data, no matter what report you're looking at, it's not going to be very effective. And then maybe more importantly, or just as importantly, is you need to know what you want to measure. So, you really need to take some time to think about how you're configuring your system to get it to function and give you the information you need and do it accurately. But then also, what do you want to be paying attention to make sure that you're successful in the end? So those are two tools I wanted to mention. And then the last one I just wanted to touch on is I think a lot of people, or most people, are probably familiar with Smart Sheets. I know a lot of clients that use that for basically project management, and that can be any form of project. Like I know some clients that use it to manage their quoting process. But the reason I wanted to mention Smart Sheets is because I came across this last week, and it's specifically addressing a comment I made last week about risk management, and in particular related to vendor management. Because what I discovered was that Smartsheet, I don't know if this is new or not, but they have templates available. So they've got some templates that are developed that are specifically designed for vendor risk management procedures. So that's, I think a resource maybe to take a look at if you are considering putting some processes in place to manage your vendor portfolio. They also, I will say, have started to develop some templates specific to COVID as well. So there is there's a business continuity tracker and an employee furlough management template that they put out, in addition to a number of other ones. So just an option or an idea, something to take a look at for those kinds of templates that are out there.
Okay, great. Thank you. Rick, as you think out along the horizon, if you will, what are some things that the audience today should be thinking about or worried about or excited about? Be any one of those.
Well, I don't want people to be worried. We want to take a positive outlook because, like we said, this pandemic, it's going to end. It's a soft trend, and we're going to remedy it. But I do think that we're still a little bit in a bit of stagnation, a little bit of paralysis dealing with the here and now. And I've listened to various people talking about, well, the cash flow has been okay. They're living off of their accounts receivable. They're starting to look at, well, what's the pipeline? What's the backlog? And you got to sit down and really reflect. We've pumped all this money into the economy. What's the impact? You got to sit down and reflect. What's going to be the impact on that? What's Q3 and Q4 going to look like? So staying so focused on today and not, as you said, Kristi, carving out an hour, 2 hours. This is probably the most critical time. People need to be sitting there saying, what's going to happen, not just Q3 and Q4, but 2021, what's that going to look like? And start to plan for those things. It's going to be unique. It's going to be an individual exercise, but we're going to be impacted by this in varying ways. And I think that's where you've got to pull together your critical thinkers, identify those things, pre-solve and address them. Quite frankly, I've heard people say the United States is kind of caught with the pants down with this pandemic. We weren't prepared for this. I think we're going to be prepared for the next time, but there's always that black swan, as I've referred to before, and the sooner you can identify it and see it coming to you so that you can be proactive and not be reactive, I think you're going to be much, much further ahead. So there's going to be impacts on governmental spending. There's going to be potentially tax increases. I think these are all things you got to start to think about, beyond the here and now, but out into the future.
Yeah, agree. So, one of the myths with R&D credits, if you will, is that, maybe I shouldn't say myth, but people quickly try to disqualify themselves from R&D credits. And it's just lack of understanding or knowledge as to truly what the potential is. So I'm going to ask Phil to speak to some creative ways from the IT perspective of how you can lean on those R&D tax credits. And then he'll bring in Tom, if it makes sense, to talk a little bit further about that. So Phil, can you share some thoughts with us?
Sure, and I won't dig into the tax credits. I'll let that up to Tom. But when we sit here and we look at businesses doing things a little bit different with their technology, different strategies, taking a look at cloud solutions. We've seen a large uptick in businesses coming to us. It actually started at the beginning of the year and has actually ramped up since the whole COVID ordeal. But organizations are coming to us to say, hey, help us strategize what we need to do with our IT. What's that roadmap look like? Help us lay it out. And that typically comes in the form of an IT assessment. So those efforts that we put into creating that roadmap for the customer, I circled back around with Tom on a few different customers and said, would this qualify? Is this something that could qualify for the R&D tax credit? And Tom said, absolutely. So if you're an organization that is engaging with an outside provider, or even your internal IT resources are expending efforts to evaluate next steps, cloud solutions, new technologies, ERP systems, how to best utilize, pull data, you need to be capturing those costs, those efforts, and then bringing it back around to see if there's an R&D tax credit for that. So Tom, if you could speak a little bit to what does that look like for organizations that are investing in their technology?
Sure. Thanks, Phil. I think a lot of people, and I know I've touched on this in previous weeks, have this kind of maybe a stereotype perception that we don't do anything that qualifies for the R&D tax credit because they think they have to be coming up with some revolutionary new product that's never been seen in the marketplace. And really, as the credit has evolved over 30, almost 40 years, the credit has become something that is really a reward for companies for taking some risk, for being innovative. So a lot of times those improvements that you make in your operations, whether it's bringing in a new process or a new technique, internally developing tools such as software, it certainly could be for developing a new product. All of those things have a chance to qualify. Now, yes, there certainly are requirements to meet the R&D requirements. I mean, there's something we call the 4-part test. And a big key of that is the activity has to be technological in nature. So if you're doing things more from a marketing perspective or that sort of a thing, that's not going to count. But things where you're improving your operations, and it has, rooted maybe in the hard sciences, there's a good chance that can work. And I think that's why we keep saying it in these meetings, because we know the new normal for most companies is going to look different. They're going to either have to redesign their physical plants, they're going to have to adapt to remote workers, they're going to have to, have a different flow within their manufacturing facilities. So it's worth a conversation. We can't guarantee that everything you do is going to qualify, but there's no harm in talking about it. And the last thing I'll say on that is the credit is obviously very valuable. It's a credit. It offsets federal taxes dollar for dollar. Every dollar of credit we can generate lowers your tax bill by $1. Just about all states, I think it's 40 couple of states, have a corresponding credit as well. So you get even a little bit more bang for your buck in lowering your state taxes as well. So we're happy to talk to you about that, even if it's just to kind of run it up the flagpole to see, is what I'm doing going to qualify or not.
All right. Thank you, Tom. So it's my understanding that many of the question and answers we've already handled. We did a great job of multitasking this time. I guess, Chad, since you're not up here, if you want to join us maybe, is there anything that you have seen while you're monitoring the questions and so forth that we should call to the attention of everybody that maybe wasn't included in our initial comments that are still causing confusion, or you're seeing themes of questions?
Sure. One or two things that I saw in reviewing the questions that I got a chance to respond to is just clarifying the non-cash compensation. And number one, if that is subject to the $100,000 limit on payroll costs for forgiveness, and also if those items are included in payroll costs for purposes of the forgiveness. So two similar but different questions. So items like retirement, health insurance, the state and local unemployment taxes, or other employer level taxes, those are part of your payroll costs. So those do count towards the 75% threshold. But the thing I want to clarify and make sure everybody hears is things like the health insurance, again, the non-cash compensation, health insurance, retirement, the employer payroll taxes to state and local, those are not part of the $100,000 limit. So you can have an individual capped at $100,000, plus you would get their health insurance, retirement, and the state and local taxes as part of that payroll cost. So that's the one I saw quite a few derivations of that question answered or asked. So I'll look over my list here, see if there's any others that stick out, but that's top of mind.
All right. Kaylee, are there any other questions that we didn't get to that we should look to entertain while we're all up here before Tom takes us out and closes out the session?
Yeah, there's actually a question here that I think Phil could address nicely. Let me get to it. It came in when we were talking about the anticipatory organization with Rick earlier. It's a question relating to Microsoft Teams. It says, how can we more efficiently use Microsoft Teams to collaborate with colleagues and clients?
And I saw that come through, and I'm thinking to myself, my goodness, that's a loaded question. There's so much out there. But the key aspect or the key portion for Teams is the video capability, okay? But there's so much to the other side. Like right now, for an example, we're using GoToWebinar. GoToWebinar, you can see more than 4 people on the screen at any given time. You can pretty much see every presenter that decides to show their face. For an example, if Chad jumped in, if Rick jumped in, you would see those individuals on video in tandem with the 5 people that are here now. With Teams, there's only 4 people that can be shown at any given time. But Teams is an effective communication tool to use with customers and to use internally from start out at a base level. Use it for your instant messaging. Use it for your video communication. Start there. Then develop a plan around, okay, you can create channels. You can create a file repository. There's all these other aspects of Teams that you can do, but you have to have a strategy behind it, like we did at Stambaugh Ness. There's so many other pieces of Teams, but you have to look at the security aspect of it. Last thing you want to have done is another place for people to dump data, and now it's all over the place. Structure it appropriately, but to be able to effectively use Teams as a beginner, understand it from a video perspective, understand how to share your screen, how to do recording, and then also the instant messaging piece of that. And of course, what I'll do is I'll take a look at the comment there, and I'll dig a little bit deeper, and I'll respond back to the individual that entered it, and dig a little bit deeper. And if we need to chat offline, that'd be great. We can do that, and I can even walk through a demo.
Thank you, Phil. This one is going to be for Chad. This person is asking if you have heard about this. It said Friday, a new statement was made by the SBA. They are requiring each borrower to memorialize their need for the funds as it related to the COVID-19 and economic impact on the company.
And I think that goes back to the question of need in regards to the ability to access liquidity and capital and other items that maybe a business did not have need as the Treasurer and the SBA intended. But we talked about that a little bit in the presentation, where we feel most small businesses are going to be impacted in a manner that there is need. Take some time now to document those items. Talk about the employees that you may have kept on payroll that you ordinarily wouldn't have without these funds. The cash flow and collection issues that you have had or anticipate, and those other matters. The certification has always been there. It was part of the application process, that there was need. And now they're just basically making sure that it's clear to folks before this May 7th date to return the funds passes, that if you feel like maybe you didn't meet that need, that you could return those. So I really think that's where some of those items are driven from, is just, kind of a last call, is if you feel like you didn't, weren't entitled to those funds, that you can bring those back. But I think it's most small businesses, in my opinion, are going to be impacted by this event in a manner that they would meet that hurdle. But each circumstances and situation is unique.
Thank you, Chad. And Kristi, this is an FMLA question. It says, is the COVID FMLA good for 10 weeks or is it 400 hours?
Because it can be used intermittently, it could be the 400 hours over a longer period of time. So essentially, it's a total of 10 weeks at 40 hours each week. That's how they get to the 400. But yeah, it can be used intermittently as long as the company and the employee can mutually agree on that. So it could carry through to the end of the year.
Thank you. And this question isn't addressed in any specific way, so anybody that's on right now can answer. It says PA issued a business guidance document yesterday, 5/4/20. It does not appear professional service businesses such as AE firms are permitted to reopen during the yellow phase. What are your thoughts?
I think things change daily. So I'm not sure if I'd make any major decisions on that. Does anybody else have thoughts on it?
Yeah, I'm not positive on that. I tried to read through that a little bit myself earlier today, and it didn't seem to be terribly industry specific. It did say that if the company has the ability to telework and has been teleworking, they should continue to do so. So I'm thinking a lot of AE firms might fall into that category, but I don't think it precluded you from going back on site during yellow if you didn't have another means to that. Again, I don't know if anybody else has any other thoughts on that, but that's the way I read it.
Thank you both. And this one's addressed to Kristi, but was also labeled for Chad and Steve Snyder here. It says, Kristi, on full-time employees, is the average FTE for the 8 weeks average all hours? What does the date June 30th mentioned previously have to do with the headcount if our 8 weeks ends mid-June? How long does everyone need to remain on payroll? Past 6/30/20? Thanks.
Chad, Steve, do you want to help me on that one?
Yeah, I can give that a shot. You know, I think what I'll start with is that let's clarify that June 30th date. That is essentially a safe harbor that if you bring back your FTEs by June 30th, you know, the SBA is going to allow you to have laid off folks during the time period. So as long as you restore them by June 30th, you have met their safe harbor in essence for that requirement. In regards to how long they have to remain on the payroll, it's during that period ending June 30th. There's really is not any clarification or guidance about calling them back if you would be in a position that you would have to put them out on unemployment on July 14th per se. But that's the current guidance. So we aren't aware of any clawback provisions. Again, I think the intent is, you know, once we're at the end of that 8-week cover period, that we're getting through the worst of this and that there's some degree of normalcy returning. And, you know, there's a need to bring those employees back for, you know, normal operations versus them needing to be subsidized. In terms of the FTE calculation, you know, you look at the hours, right now it's on a per pay basis, I believe, and look at those counts. And really the key metric is the one at June 30th that they're going to measure to. So I think looking at that question, I'm thinking I've addressed each of the components, but certainly if somebody's seeing or hearing something I missed, please jump in.
Alrighty, and this one is going to be HR related. What questions can we ask employees before coming back?
Katie, you want that one?
Sure. If you were on the call last week when the employment attorney was on the line, he had talked about that we can ask people about if they have a temperature or not. So that's something that you can do and know that, you know, that you're fully in your rights by asking that question. I definitely would recommend that if that is something that you're going to do it for all, because it is something that you don't want to find yourself where you're singling out somebody. Also, too, I think it'd be important to have a quick survey that you can send out to your employees, you know, maybe asking them those questions, you know, have you run a fever? Do you have anything along those lines? And I know that, I think, Kristi, we were kind of talking about that a little bit, you know, some of the things that you might have bumped in. I don't know if you want to add anything.
I don't think I have anything to add other than, you know, it might make sense in some situations where you wouldn't have to take temperatures if all employees are working in a single office and you require them to wear a face mask out into an open area. But yeah, I don't really have anything additional.
Kristi, if I may jump out of my lane here for a second.
Go for it.
I would also suggest taking a look. I came across this earlier today. The Equal Employment Opportunity Commission website has some, I think, some guidance on that subject.
Perfect. Thank you, Darren.
And Chad, this next one is going to be for you. It says, what if an employee quit after the first measurement date? Is that a reduction in our FTE count?
Yes, as it stands now, that the de minimis exception that I mentioned earlier was only for when individuals were not willing to come back off of being laid off or furloughed. Individuals that have been, you know, terminated or quit in the calculation do still impair and negatively impact the forgiveness. Now, if you would replace that employee, the replacement would count on your FTEs. So you do have an opportunity to remedy the individual that has departed.
Thank you. This is another question related to employee count. It says, and it's a scenario, if we have 6 part-time employees on the payroll right now, but have 1 full-time that is not on the payroll that was, could these part-time employees cover that one lost?
Yeah, essentially, it's looking at it on an FTE basis. So if the part-time employees aggregate to at least 30 hours in total, they count as one FTE. So part-time individuals, those individuals their hours are put into a pool, divided by 30, and the 30 is how we believe this is going to be calculated. Again, that's not definitive in the guidance right now, but everything I've seen is that 30 is the number. And as long as they work more than that 30 hours, they do count as one FTE and maybe even more.
All right, and while I have you here, this is another PPP FTE question, excuse me. If an employee resigns and leaves on their own for a different full-time employment opportunity elsewhere during the PPP period, do we need to replace them by June 30th since our FTEs have dropped?
Yes. To ensure that maximum forgiveness, you would need to replace that individual, because somebody leaving on their own does not qualify for any of the exemptions in regards to the FTE. So you'd add the FTE impact, and also I'll add you also would have the potentially some 75% salary considerations if that individual would mess that calculation up by them no longer being there.
Okay, and the next question is, was there a provision at the beginning that the employers could furlough up to 20% of staff?
I'll jump. I'm assuming this is related to the PPP as well. There was a time period permitted where layoffs could be made and not count negatively, as long as they were restored by June 30th. There's also a provision that you need to compensate at least the 75% levels of the prior quarter to receive the maximum PPP forgiveness. But the 20% threshold, that's not ringing a bell to me in terms of a limit on the furlough. I don't know if that rings a bell with anybody else. It's just not something I'm having a recollection of at this point.
Alrighty, and one more HR question before I pass it over to Tom to kind of close us out here on the hour. It's a Pennsylvania-related question. It says, PA has issued guidance about companies reopening. If a customer comes in without a face mask and the company is not allowed to ask for documents, how should a company treat that?
Yeah, it's really about defining what your policy is going to be. You can't ask medical questions. So if they say they have asthma, is there another way you can service them without having them enter your facility and potentially exposing your employees? I'm not sure. Katie, do you have any other thoughts?
No, I don't. I agree with what you're saying.
Alrighty, well with that, I'm going to pass it over to Tom, and thank you to all of our experts who are on here answering all these Q&As and who have sat on our round table. So Tom, do you want to take us home?
Sure. Thank you, Kaylee, and thank you everybody for your insight and everyone for joining us again today. Just a couple of things as we wrap up. Just a reminder again to get your AO ideas in. There will be a spot on the survey that's coming out for you to enter those ideas on there as well. So please do enter them there on the survey, and we'll be going through them and awarding the book as Rick talked about. I also wanted to just update the whole way back to the session that Kristi and Chad and I hosted at the beginning on the PPP taxable example. I've actually updated that example and made it, I think, a little bit clearer than what I had in the slide earlier. I apologize about that. And that's going to be actually in the copy that you receive as an attendee today. I just enhanced it a little bit more to make it a little bit more understandable. So hopefully that'll clear that up for you. Also, thank you for your input on our opening poll question about bringing in other industry speakers, and we'll certainly be working on that and determining who else might be able to join us in the upcoming weeks. We did want to remind you that over and above these town halls, there certainly are many other ways that we can help you. Please don't hesitate to reach out to us. A couple of those ways, if we just advance there, Kaylee, we kind of grouped them into categories. Certainly anything PPP related. We hear so many questions on this every week. I think Chad and when he's on, Steve Snyder get the kind of do the heavy lifting. I know they're answering an awful lot of questions behind the scenes as the town hall goes forward. But if you have any questions on how to document your rationale for the need for the loan, performing the forgiveness calculations, and compiling the supporting documentation that you'll need to give to your lender, how does it make sense to maximize that forgiveness and all of that sort of thing. We're happy to help with all of that. And on each of these pages, you do see some contact information, the people that are spearheading for those initiatives. Please just reach out to them by email. Even if it's just questions you have, we're happy to answer them. Next, we have on the technology end, certainly all of these things that Phil's talked about, from a security, getting your remote workforce in place, training, and so on. I think Phil had already made mention to the question about the team, Microsoft Teams, that he's more than willing to have a call and help you out with that. Next area we have is certainly the workforce area, which is Kristi's area. All of those things. I mean, I know state by state, the unemployment has been kind of messy as each of the states try to get their systems upgraded to accommodate the new rules, getting self-employed people on unemployment, handling the extra $600 a week federal, questions about how long does that last? Should I bring people back on the PPP? Should I keep them out on unemployment? How do I have those conversations with employees that don't want to come back? And then again, how does all of this interplay between my payroll and all of these different leave acts? And certainly, I think, as Kristi said, filing second quarter 941s, which you probably have done routinely for many, many years, is going to be a whole new ball game here when we get to July. And you may need to start planning for that now to make sure you're capturing the appropriate data. And then last but not least, the tax area, which certainly is my area. We talked about R&D tax credit opportunities. Happy to have a phone call with you to talk about that. We certainly think the need to do your tax planning for 2020 is very important. We don't want you to have a surprise after year end, especially if we're talking about things like the PPP loan forgiveness. You may be seeing dips in your revenue streams for the year. You may be incurring additional cost. We maybe can save you some cash flow by looking at what your normal estimated tax payments would be and adjusting them, and maybe saying they may not just be as necessary as they were. We've talked about in previous weeks the new provision to take advantage of net operating losses, carry back, get refunds, and certainly the qualified improvement property and depreciation analysis for some of those new rules as well. And this is certainly not meant to be an all-inclusive list. We just wanted you to have this in front of you so you knew some of those very specific items that you may have questions come up throughout the week. We're happy to help you out with that. And if it makes sense to dive a little deeper and get into your particular numbers, we'll certainly do that for you. So again, we thank you for joining us once again. We'll be back again next week on May the 12th at 2 p.m. Eastern Time. We really appreciate all of you joining us from all over the U.S. for these sessions, and we really appreciate the nice comments that you've all sent our way. And certainly if you have any other comments on how we can improve them or topics you'd like to see us discuss, send them our way, and we're happy to incorporate them. So with that, we'll sign off. Wish you all a happy Cinco de Mayo, and we hope you have a good week ahead. Thank you.